Over the next couple weeks, the U.S. stock market is set to accommodate a staggering $15 billion in IPOs. To put that in context, over a normal 2 to 3 week period, it usually can handle $3 to $5 billion. I'm going to tell you what it means to you, and I'm going to tell you what you can do about it. But first, I have to give you a little bit of context. For those of you who don't know, IPO is an initial public offering. This is when a company has been running really well, they've been held privately, and then they decide that they are going to go public. They want to be traded on a stock exchange. This is a big deal because investment bankers get involved. They set the price. They have to allocate the shares to big investors. It's a lot of work that needs to be done, and that IPO sets the tone for how demand this particular stock is. Why is this noteworthy if we have 15 billion coming to market versus the normal 3 to 5? Because the money has to come from somewhere. Investment bankers, they'll allocate it in tranches to big investors. Big investors, they typically have to sell something to accommodate for this new IPO. Some of the things that they can sell, which could hurt your pocket, is sell their other stocks. A big sell-off could happen to accommodate this. They could sell real estate. They could also sell off their shares of private equity, private credit. Y'all already know that we're in the midst of a private credit crisis boiling, but we got all this IPO action, and guess what? A lot of these investors want a piece of the action. Here is the other thing. I'm not factoring in a bunch of big IPOs that we're expecting, like Anthropic, OpenAI, and SpaceX. So over the next 90 days, potentially 100 billion could touch the market, where the average is about 20 billion. Here are some of the effects of something like this. 1, this widens the wealth gap. The rich get richer and the poor get poorer. Number 2, this could tighten credit because, like I said, money is going to be pulled out from one place and put into another place, and we already have a private credit crisis. Monies could be coming out of that to get a little bit of SpaceX stock, and this will trickle down to you. When you think about private credit and all of these investors already selling, you need to think about this trickling down to business credit, credit card credit. It will 100% trickle down to you. The other thing that this can adversely affect is volatility. It can actually increase. You think the stock market is crazy right now? Wait till they get a load of these IPOs. The next thing that it can affect is hiring. Guess what? When you got all that volatility, jobs get cut. And housing. This hits housing in multiple places. If you listen to the podcast, you already know where I'm going to be thinking from this, because housing already touches on every part of the economy, and trust and believe this will affect housing. What can you do? I've already told you this before. Secure your business credit now. Secure your credit cards now. If you need a plug, DM me. I got a person for you. Number 2, invest in private markets. I told you guys this before. There's going to be huge opportunity there. Everyone's looking at public markets right now, and they're completely overlooking private market. Go to the private markets. There's going to be huge opportunity there, a lot of value there, and not enough liquidity there. Your local/domestic businesses, private though. And number 3, if you're in real estate, I'm going to keep telling you this, underwrite conservatively. Get real conservative with yours. Like, I mean it. Okay, I did not send a newsletter on Sunday because I needed to get some rest, y'all. But I'm going to send one out this week. I got a bunch of stuff I want to share with you. I'll outline some more investment strategies as a result of this. Huge IPOs coming. It's going to shift everything. Comment newsletter down below so I can send you a copy of the newsletter.